Hey guys, welcome to Hedge, and you're speaking to Matt, the founder, and I'm here once again to bring you another educational crypto video, financial video in general. This is not financial advice. We do not accept any liabilities for losses that you may incur. So with that in mind, you should be able to enjoy this video. And today, the subject of our video is going to be rather interesting because it's going to be talking about the Evergrande real estate company in China and their potential collapse and how it might actually affect more people than they're saying. And basically what's happening here is we're looking at potentially the 2008 crisis of America 2.0, because this time it will be involving China instead of the US. But here's the thing, is that this becomes a lot more complicated because China is one of the biggest real estate developers globally out of almost every country. You know what I mean? Like a $300 billion company that develops real estate defaulting is really not a good sign, because that's huge. And that could just be the beginning of many others who are over leveraged similar to them, you know? And what I find crazy over here is the fact that, like, they're talking about just the stock index of that company dropping 80-90% over the course of the year, but also the fact that, like, that drop has also affected the US stock market. And with the economy slowing down and the Delta variant, like, shutting down more and more of the economy, it's beginning to basically affect everyone globally. So yeah, as you can see, the shares dropped heavily here, 80-90%, and that's a horrible sign for something that takes on the largest amount of real estate development in all of China. And more or less what you're seeing is that they're basically being forced to pay out bonds that they used to create this debt so that they could create more property. But when you're taking a bond, you're basically committing yourself to debt. And the thing about debt is it has a funny way of not being repaid on a global scale. So when you're looking at treasury bonds and yield bonds and all these different things that you're committing debt for interest. Basically, you're getting paid out on interest based off of debt that you're committing based on the idea that you're going to pay it. But the fact that they're not going to pay it, that could set off a chain effect that could actually really mess up the economy. And basically what they're saying is that as more and more bonds are maturing, this company is going to be forced to pay them out. And without having any actual liquid to pay it out, that's gonna basically not only cause insolvency, but it causes people to basically call upon their debts. So as you're calling upon debts, other people default, and that one person calling on their debt could cause a string of defaults everywhere that it's involved with. Because if everyone's over leveraged like them, that means everyone who's over leveraged will eventually be called in for their debt, right? And it becomes like a game of hot potato, except everyone is just, holding a hot potato at the end. And more or less, like, it's just wild to think how that's breaking down, because most people don't really think that Chinese real estate could affect the world. But as we've seen globally, that China, buys its ways into countries, into their real estate, and develops them. And a country that plays the game like that, if its real estate gets affected, that means a lot of foreign investment globally gets affected by that. And what you see here is they're more or less on the brink of collapse, and the bank doesn't want to bail them out. You could clearly see how this is going to become an issue, as people's mortgages and where people live could end up repossessed if the housing, like, drops. Because think about it, if you're paying, let's say you're paying for a house $500,000 and the value of it drops to 100, for example, or an apartment drops to 100,000, it's like you're paying the interest on something that's overvalued at that point, and that destroys your wallet, and it kills the ability for resale at that point until the market recovers. In June, the company tried to pay back some of its debt by basically selling apartments that haven't even been built yet. So like instead of paying the debt because they're unable to pay the debt because they have no money, they've been playing it all on credit. They're offering basically to pay their debt in apartments, which gives you an idea of how empty all these developments are. And what's interesting is you look at Montreal, and this is something that I wanted to mention, is because in Montreal we're having a lot of condos pop up. And what do I notice about a lot of these condos? They're empty. Like no one's in them, no one's buying them. And it's starting to make me realize that like the idea of all these things being empty, it's almost like it's a sign that China is there already. Because for all we know, these are foreign developments that are being brought up by offshore investment, and then like not being sold because they're speculating. They're using they're using basically the housing market as a speculation of how much people could buy and at what prices. The expression bricks always go up, it only works if bricks are a bit of a scarcity. But the thing is condos are not a scarcity. There's always too many condos in a place like Montreal. And you see like China's hand in Canadian real estate. They own almost all of Vancouver. They're owning a large part of Toronto, and they're buying up a lot of Montreal. So China collapsing could just be a huge sign of Canadian real estate getting hurt by that. Because if their hand is that deep, it's possible that it could hurt us. That was basically another thing that's been going on in my mind. And in a previous video, I mentioned that the Canadian real estate could actually take a beating because of that. Or not, just in general. I thought that Canadian real estate is bound to get a correction. And I think this is going to be what starts that domino effect. And it might not just be Canada that gets hurt by this. It could be anywhere where China's heavily invested that's going to get hurt. Because if that becomes a default and debts start being called in from everywhere, it's going to be a bigger issue. Like we could go deeper into a recession. What's crazy is I was always saying that 2008 was that was a clear recession. It was bad. We had we had the subprime meltdown. We had a housing collapse in the States, right? But I know that it wasn't as bad as it should have been, and that's because they printed money to inflate off that crash to keep it from really like crashing heavily. And what all that really did was it delayed that economic crash. And I feel like what we're seeing now in the economy is the result of us catching up with 2008. And how everyone responds to this crisis is going to be a clear indication of what the next 10 years are going to be like. Because they just keep printing. And everyone has been printing globally. And part of me is starting to think that the reason they're printing so much is because they're seeing basically 2008 2.0, the next big financial crisis, and they're basically preparing for it as much as possible, because once the people realize that the governments and the banks are fucking up that heavily, people aren't going to trust them anymore. And they can't lose that trust, because if they do, they're going to have serious issues. People are going to be out on the streets protesting, lighting fires, doing this, buying crypto. They're going to be buying Bitcoin because they don't want to give their money to the government anymore. So something like this could be a domino effect for something much bigger if it's not handled properly. If this becomes another 2008 and the people are forced to pay the bill on companies that are too big to fail, it's just going to be a situation where people are going to trust their banks and their governments much less. And, like they're saying that this company could end up bankrupt, broken up, or bailed out. None of these things would be ideal for them. Because the reality is if the government of China ends up buying this private company and bailing them out and basically taking government share in that company, that could be a scary thing, because then they could weaponize real estate after the crash is finished and continue over leveraging and buying everything up, but as a government entity, to basically expand their reach more and more, not just on a private perspective, but on a governmental perspective. This is two Canadian bank chiefs or bank economists that have both weighed in on this Chinese crash. Two major Canadian people stepping in and making their opinion on Chinese real estate that are involved with banks, by the way. So it's like these are bank people saying this. It's like that should give you an idea that the Chinese real estate market is heavily webbed into the Canadian one. From what I see, China's coming in, they're developing our real estate, and Canada and all these places are helping to fund it. And if both of them crash, that could be an issue even for us as Canadians because of how much of an influence we have from China at the moment. Although not directly, Evergrande does have assets in Europe and North America, including the Ritzy Chateau in Montebello, which is a resort in Quebec. And you gotta ask yourself, that's what they publicly tell you that they have a hand in. Imagine how much other things they don't have a hand in. And then this brings me back to what I was saying before about condos being empty. It's like, you see right here, it's like they're demolishing condos that are empty because of no demand and basically just being unfinished. So it's like we're seeing more and more of this. It's almost like they're taking in that debt just to take in that debt, dispersing the money around and not necessarily even finishing their projects. So it's like it almost looks like they're trying to over leverage through debt, almost as a form to hurt the economy on purpose, because they're not selling the units. You can see it right here, and they're demolishing. Like you can see here, look at that. Demolishing a whole complex of condos. And you gotta ask yourself, if they're doing that there in China where there's less space, in Canada, how many condos do we have built? And there's more of them popping up. You're gonna convince me that Canada, with such a small population versus a place like China, like that people are gonna fill up those buildings and these ones aren't gonna be filled up? I think that personally condos are a bubble right now. Because if that's what's happening there, it's only a matter of time before these things, which aren't being sold, they're mostly just being rented to people who want to be rented in a condo. But the ones that aren't being sold, guess what? They're just going to remain vacant. People can't make money on a vacant condo. And that's why this collapse is happening. People are building up too much and they're not even doing anything with it. They're just speculating that they could do something with it eventually. But the thing is when your creditors come in for a payment, they need that payment, right? And if they don't get it, things are going to be bad for the company and everything around it. We could be looking at a 2008 2.0 right now, and I'm not exactly sure how far this thing could end up reaching, simply because we don't know how much China actually owns globally. We know China's going to get it. We know they're going to feel it in their little recession. We don't know who else is going to feel it, because if China's building everywhere in the world, which you could see is clearly happening, not just in Canada, but globally. Canada just happens to have more places being developed by them that we see. But who else is going to be affected that we don't see? How much offshore things do they have? Because that's what they're saying is going to be the most affected by this. Because internally, they're saying that they're not going to allow a company that big to just disappear. But anything offshore could, and that could be what triggers basically a 2008, but to everyone else. That's something to keep in mind. You know, people in general are panicked, and because of that panic, think of it this way too. The stock market's going to feel it. Other markets are going to feel it, because, you know, like, it's not just us who holds stocks or crypto. China does too. And if people start fearing that their real estate is in trouble, they're going to start taking profits elsewhere to start getting ready. That could be another reason as to why things are dropping globally. We saw the S&P drop 3%, which is pretty big. It's one of the biggest drops. People were panicking over that. Basically, we could be seeing the beginning of something much bigger than just one little small collapse of a real estate company here. My 2 cents, more or less, to summarize this video, my opinion, which is once again not financial advice. I'm thinking that we could be seeing a lot of real estate globally dropping in price for a little while, kind of like this. Then it will consolidate and then permanently start going up due to inflation. So inflation will be what pushes the market back up eventually, but we're very likely to see a correction, especially in the condo market. The housing market, real estate, like actual like duplexes and stuff where you own the property, that won't necessarily be affected too bad. But condo resale value, that's what's most likely to be destroyed. I wouldn't even be surprised to see condos going for 50 or 100,000 in the near future, just because there's too much of them. There's way too much of them. No one's gonna pay the same price for a condo as they would for a house with a property. If they do, they're stupid. You know, it's just not smart. You know, this is just not a good idea unless you have prime location somewhere. That's my opinion on that. I'm thinking that potentially if stocks and real estate drop due to this, it's a very good chance crypto will take off because of that. Market shares that you haven't seen flow out of stocks and real estate will start to flow into crypto because people want a place to go that isn't government controlled or bank controlled. That's likely where they're gonna flock because they don't want to be in that grip after another, let's say, subprime meltdown. And once again, with Canada at a GDP ratio of 9.5% just for their housing, just for retail real estate, that's where we're at. Our GDP is almost 10% reliant on real estate. How do you think that the people developing us crashing, like how do you think that could affect an economy that's 10% based on real estate? That more or less summarizes this video on my opinion as to what's going to happen here. I want you guys to like, comment, and subscribe. And if you have any questions or anything that you would like to add to what I have to say here today, please don't be shy to drop it. And please, guys, we're going to be dropping a Patreon soon, and you should definitely check it out. We'll be offering exclusives to that Patreon, and it would greatly help a developing group like us so that we can provide you better content and give you more time as the viewer. Thank you. Have a great evening.